Tesla just reported it was down 7% at one point after hours. Now I think it's down around 3%. They reported $1.05 per share in earnings versus $1.01 was expected. They missed on revenue though, 21.45 billion versus 21.96. Now guys, those Tesla fanboys out there, I have some bad news for you about Tesla. They have cash flow. I know that really, really devastates you, and you probably want to hurt yourself. Do not hurt yourself. I know cash flow sucks. I know you guys are absolutely afraid of cash flow because it means the company is boring. How could they possibly make money? This is not part of the plan. $3.3 billion in cash flow in a quarter?
That's a lot of cash flow.
Oh my God, please stop, Tesla. Stop being a real business. Stop being a real business.
So are they dead now?
They're dead. They can no longer be. Kathy Wood has sold her entire position of Tesla because it has cash flow, and cash flow does not equal disruption. That is all sarcasm, people. Guys, I love the fact it's becoming a cash flowing business. But there's an old saying in startups. The second you start making money, valuation matters, and that sucks because you can't sit there and tell the story of like, well, we're losing money. Yeah, but look at the future. Yeah. The second you start getting money, it's like, there's concrete numbers now. And you're like, oh, shoot. Guys, $3.3 billion in cash flow on $21.45 billion in revenue. That's 15%.
Solid.
So I still don't believe how a company like Tesla, it's a car company, can have such large margins. So one of the things I want you to look at, and what we should look at is, what's that cash flow consisting of? Like, what's in there? Because I just believe that companies mean revert. And with all these companies entering the electric business and electric vehicle business, at some point, everybody's going to have the same margins, give or take. Mm-hmm. What's the reason why Tesla's going to have better? I don't know. You're probably looking at this now going, this idiot doesn't get it. It's Tesla. Elon Musk. By the way, did you see
power?
Did you see his new truck? He said it can go 1 million miles without ever breaking down, guaranteed.
Really?
Because it has 4 engines and only needs 2 to make it.
Well, it sounds like another overpromise, underdeliver thing, but
I mean, he loves doing that. So let's look at Tesla here. Mo, do you have the press release or anything like that? Okay,
so deliveries. Yeah. Deliveries came in 343,000 cars delivered this quarter. Good. Vehicle production, 365,000. And then in China, even after all the shutdowns and everything, they came in with record number, 83,135 deliveries in China. So that's a good thing. All of this is the thing that I was waiting for. Let Tesla become a company, a good company.
So why is it down, Mo?
Oh, well, that don't worry about that.
So here's my point, guys. In the past, Tesla would miss and it would still go up.
Yep.
Now it's going down when it beat on EPS.
Beat on everything.
It missed on revenue by $50 million.
Okay.
But it had $3.3 billion in cash flow versus 2.8 expected.
And it had record sales in China. If that happened in the past, this should be double the price right now today.
It would be up 100% after hours.
Oh my God.
So guys, you know us. I mean, if you're new to the channel, Mo and I are being funny about Tesla. Mo owns a Tesla. I used to have a Tesla. We're Tesla fanboys in the product, but we differentiate between a company and product and the stock price. And the stock price still doesn't make sense to us. It's hard. I get that. But we look at this company as a car company. Does it have more to it? Sure. Just like back in 2000, the companies weren't selling, a company that was on the internet selling dog food wasn't a dog food company. They were an internet company. It's like, but they sell dog food. They're a dog food company. That's just it. Like the majority of their revenue comes from car sales. So it's a car company. Now, what's the car company consist of? What's their margin? So I'm looking at this saying, okay, 27% gross margin. I mean, that's pretty good. That's higher than a lot of companies, right?
For sure.
How much of that is government subsidies? I don't know.
I know that you're still getting credits. It's not $7,500, but you are still getting these government credits. That's something that needs to be considered.
So either way, let's do our little analysis. Let's go through our 8 pillars right here. So guys, dilution, they've increased the number of shares by 25%. They're still selling for 400 times 5-year PE and 440 times price to free cash flow. In the last year, they had $6.93 billion in free cash flow. That does not include the 3.3 they just had. So let's say it's 3.3 times 4. That's what, 13.2 billion? Okay. So what's a reasonable multiple free cash flow? 13.2. It's still a growing company. Call it 30 times free cash flow. 13.2 times 30 equals $400 billion. Their current market cap is $700 billion. Okay. It's still overpriced, in my opinion. And I'm being very aggressive with a 30 times. Tesla's a great company.
Yes, it is.
They're probably going to be around for a long time. I do believe that. Let's look what the analysts are saying.
If you told me Tesla was gone in 10 years,
I'd be shocked.
I would be very surprised.
Absolutely.
Yeah.
So they're looking at $4 EPS for the year and $12.50 in the next 3 or 4 years. That's pretty solid revenue growth. Okay, it's $85 billion this year, estimated $266 billion in 2026. All right, now if it's a car company, the average car company sells for between 0.5 and 1 time sales. At $266 billion, it's $130 to $260 billion market cap in 4 or 5 years.
Yeah.
It's currently at $700 billion.
Right.
So call it 2 to, I don't know what the number is, but right now, Tesla is selling for 10 times sales. 10 times. Now, they are growing, and this $21.45 billion in revenue. Let's look at how that compares to last year.
Yeah, what did they do in revenue last year?
For the quarter ending what?
In October.
September,
sorry. We are October.
13.76. That's big time growth.
That is big growth.
That's over 50% growth.
Especially during times of supply chain issues and everything else that's going on.
Yep.
Still sustained growth. Good growth.
Yeah, great growth. So I love it. And trust me when I say this, mark my words. There will be a time on this channel that Mo and I will be saying, you need to buy Tesla stock. And you guys will be saying, you're such an idiot, guys. Tesla stock sucks. Look, it's down 80% in the last 5 years.
You should have bought Tesla in 2019.
And I'll be like, exactly. It's down 80% in the last 5 years and their fundamentals have gotten better. So right now, I'm going to put it in Stock Analyzer tool. Wait a second. Let's go back to the analyst estimates.
I'm excited to see what this one comes out because I can't remember. I haven't analyzed this in quite some time.
Okay. I'm going to go 15, 22.5, and 30% revenue growth in the next 10 years. Now, keep in mind.
That's a lot.
10 years, 1.3 to the power of 10 times, let's say they do $80 billion this year. That would make it $1.1 trillion company in 10 years in revenue. That's double what the biggest company in the world does right now.
What's the biggest market cap? That's in revenue?
Revenue.
Okay.
Yeah. Okay.
Maybe that's not a realistic number.
Profit margin. Let's call it 7, 10, and 13. Now you might sit there and say, Paul, they just got 15% growth. I get it. But again, remember, as more entrants enter the market, as more car companies do electric and it gets saturated, the margins will start to come down. As you get bigger and bigger and bigger, the margins you think would go up, but eventually everything mean reverts, especially in highly competitive fields like the auto industry.
In my brother's neighborhood down in Florida, I saw 5 Rivians in that neighborhood.
Come on.
Yeah, they were everywhere. Well, everywhere for being a brand new company. I was shocked.
Now, I'm doing the exact same thing for profit margin. And for PE, I'm doing 20, 25, and 30. Guys, that's not PE today. That's PE in 10 years.
Thanks.
That's an insane number. Actually, I'm not going to do it that much. I'm going to do 15, 20, 15, 18, and 21. That's just insane. No company that does $1 trillion in revenue should have that kind of PE.
No.
Desired return, 12.5, 15, 17.5. Mo, butcher these for me. What would you change in this?
Well, everything on the high side is, I think,
insane.
Completely unrealistic. I want to see what the low number is going to put out. I think the low number is the closest thing to
reality.
Yep.
All right, guys, I'm hitting the analyze button. This is the big moment of truth. Now remember, there's a lot of assumptions made here, and every investment's the present value of all future cash flow. We don't know what the future holds. There are assumptions we have to make. The question is, if it's garbage in, it's going to be garbage out. My goal is to be conservative. And I know. I already feel it. I already feel the person out there, the hipster with the man bun, typing away at his iPad, at his MacBook Pro going, this guy doesn't get it. I'm going to buy Bitcoin and buy Tesla. I know you badly want this company to be the biggest company in the world, and it very well could be. However,
it almost was.
My goal is my money is too valuable to me to go overpay for some sort of investment. And if you don't believe that when you buy a stock, you're buying a piece of a business, you need to just dollar cost average into short term, into low cost ETFs. Because if you want to buy individual stocks, you may as well just go to the bathroom, take all of your money and dump it in the toilet and flush away, because that's what you're doing. You have to look at buying a stock as buying a piece of a business, which is buying a future cash flow. And since we don't know that cash flow, your job is to be conservative and not assume everything's going to happen great, because it's not going to. No company stays great forever.
Right.
So,
all right.
I would like to give you guys Mo's address so that when you hate this video, you can send him what is it called? Glitter bombs, which are illegal, I think.
Glitter bombs are illegal, but glitter is the blood of like the devil.
Oh yeah, Mo hates.
I hate glitter. If
totally
anybody ever
forgot
wanted
about
to troll
that.
me, glitter.
Mo literally, his girlfriend had a party at their house, and she put glitter. And I
was,
never
like,
seen him so
contemplating.
upset.
I was like, the one night. This is kind of embarrassing. I do have a little bit of OCD when things get cut.
we all do.
And I was like laying on the floor of the foyer, wiping things up, and I just laid down and I started to like tear up. I was like, this is overwhelming.
All right.
I was like, okay, do I have to sell the house? I don't know. What's
Sell the
happening
house.
right now?
I'd have bought it. It's a crappy house. That's half the price. Analyze button. All right, guys. Even on the highest of I actually thought this was going to be green. On the highest of
did too.
expectations, we're at 191.
unbelievable.
On the lowest side, 40, somewhere in the middle here, 100. It's still, by the way, the good news is, if you go look at our past videos, the value is going up because the fundamentals get better. I adjust my value. I didn't think they could still grow at these. So great. More power to them. But guys.
The amazing thing is like he said, butcher this. I literally took out mid and high and said, I'm not even, just get rid of them. And that's still not green on the high side. 30% revenue growth. 1 trillion?
So what you're saying, guys, is if you believe the high side, you believe the stock is worth 213 today, you're assuming higher numbers than all of this.
Yeah. So you're assuming,
and guess what? This is discounted at 17.5% return.
and that's 10 years from now.
17.5% return a year for 10 years.
Oh my God.
For you to get 10% return, it's going to be a higher price, though.
Right.
So how much higher? Oh, there you go.
Okay.
If you only want a 10% return, you're okay.
What about 12% return?
You're okay.
Okay, there you go.
Great.
But you have to think that you have to assume that they're going to do 30% revenue.
The higher your assumptions, the bigger your desired annual return be. And the chances of Tesla being $1 trillion company in 10 years is probably not as good as it not being that. So, guys, please subscribe to the channel. If you like my humor, if you hate me, please subscribe anyhow, because I will say much more things you're going to hate in the future. Just wait. I'm trying to convince Tim to let me do a video that he absolutely will not let me do. So thank you very much for your time. Go Tesla, go Elon.
See ya.